Hello viewers and welcome to the Proshare Fireside chat. My name is Ottoabasi Abasiekong. This program is designed to engage market and business leaders on issues related to the economy, business environment, and of course, the financial markets. Our conversation today will be on key takeaways from the Enterprise NGR's 2025 State of Enterprise Report. With me to have this conversation is Ms. Obi Ibekwe, the CEO of Enterprise NGR. It's great to have you on a fireside chat.
Thank you for having me. It's a
Thank
pleasure to be here.
Thank you. And joining me to engage the CEO of Enterprise NGR is Mr. Teslim Shitta-BEY, Director of Research, Proshare.
Thank you very much.
Always nice having this
Always
conversation
nice
with you on the side. Yeah. Let me first begin by commending this latest report that's come out, because Enterprise NGR has continued to drive that advocacy for the financial and professional services sector, and it's quite commendable. But let's first begin with this report. Very interesting report, 142 pages, quite remarkable. In terms of data, in Nigeria, data accuracy is very important to credibility of reports, whatever sector, whatever industry. Can you share with us your experience for this edition in terms of getting this data, the engagement with critical agencies like the National Bureau of Statistics and regulators? What are the learning points and those gaps that you believe can be addressed in getting more accurate and credible data?
Thank you very much. It's really a pleasure to be here, and thank you for this opportunity to talk about the State of Enterprise report. It's a report that we've conceived very carefully and that speaks to the mission of Enterprise NGR, which is to spotlight the entire ecosystem of the financial and professional services sector. Why? Because Enterprise NGR believes that for us to, drive economic development, this sector, which we fondly call the FPS sector, is critical, to achieving that goal, and therefore requires laser focus in terms of policy making, in terms of creating an enabling environment to help it thrive. Because if it thrives, the economy, will tend to do well. Now, coming back to your question on data, we've been publishing this report since 2022. And we rely on the National Bureau of Statistics and industry regulators like CBN, PENCOM, NICOM to achieve a comprehensive coverage of the report, considering that we cover 9 subsectors. And I would like to commend the National Bureau of Statistics because to collect and publish data in a complex and dynamic environment like Nigeria is, at best, a very difficult task, and yet very essential. That said, there were, a consistent takeaway that we've had since 2022. We've realized the need to, have an improved national data structure. In compiling this report, some of the challenges, one, the delayed publication of the data, which, that is why we were forced to publish almost mid-year on information on performance from the previous year. We'd like to see more timely publication of that data so that the analysis, etc., will be relevant, to the time. Secondly, for our sector, our ecosystem that we cover, one of the challenges we have is that some subsectors were unable to really analyze because their data is not disaggregated, it's lumped up with other sectors. So we have to, go the extra mile to distill really the performance in those subsectors. And I think the other one is data fragmentation. So issues like that is what we've encountered. But what we're doing is that we've approached NBS to work with them, to improve the data availability and accuracy and granulation, for this for our ecosystem, and we actually advocate for the private sector generally to help in this regard. It's not something that the government would do alone, and more so in this era of data importance. We really need to relook how Nigeria is managing, collecting data, managing that data, the governance around it, etc., and ensuring accuracy. Now, in overcoming the comments that or difficulties that we had with our data, what else we do is that our members are very involved in the production of the report. So they contribute to the data gathering, and they also contribute segments of the report in their areas of expertise. And thereafter, to also ensure the accuracy of the data, we go through a multi-approached verification of the data. So even though we've gotten a data from a particular source, we still painstakingly look at other sources to make sure that the data we're putting forward is reliable and that the report is credible. But at the end of the day, going forward, we're going to be pushing the advocacy to work with the National Bureau of Statistics in improving the availability of accurate data for better planning going forward.
I like what you said about having a very comprehensive data structure in the country. It's really, it's time, it's apt, so that we can be able to derive value from it and really improve our economic activities. Certainty, predictability is very important, and data accuracy in that regard. Very, very interesting insights. Thank you to you, Mr. Teslim.
Thank you very much.
Yeah.
The report, as rightly pointed out, was very large and comprehensive, very useful to people like myself who like crunching data and all that. But something that struck me was that you recommended in the report that the government's macroeconomic reforms need to be followed through consistently and carefully. That was more or less like a given to most of us who believe that the reforms are heading in the right direction, but there's a need for consistency because there's certain other outcomes from such reforms. Mm-hmm. However, I'd like to look at the issues of foreign exchange and foreign exchange and basically cash transfers, things that foreign exchange market has been stable. Cash transfers have been an issue that the IMF has talked about. The report mentions these two things actually, and looks at how these issues should be addressed. I don't know whether you have any broad comments on that for now. The broad comments, we could go into more detail later, but those broad comments on looking at issues like the foreign exchange market, how governments should approach it based on what your members believe will be the most effective way of ensuring stability of foreign exchange, and how that trickles down into the various sectors of the economy.
Okay, so our recommendation in the report that we sustain the macroeconomic reforms is grounded in the understanding that consistency is critical to long-term planning and growth. On FX flows, the SOE report highlights the importance of focusing on attracting foreign direct and portfolio investments, diversifying export earnings beyond oil, and optimizing diaspora remittances. And the truth of the matter is that this regime has undertaken some very serious and wide-ranging policy reforms that we are of the view were necessary, but of course there's some short-term disruptions that we're all suffering from. But I dare say that we're beginning to see the dividends of those policies and the importance of sustaining, given the fact that we're starting to see results. For instance, in the foreign exchange market, even though the exchange rate, has been depreciated, but at least now we've achieved some level of stability. It's hovering around a certain figure, and really and truly for business, it's all about predictability, not the actual exchange rate. So as far as that's concerned, I think that, and that's why our recommendation on sustaining, policy consistency is something that we need to, focus on. We've seen it work in Lagos State. We'd like to see it, work across board from the federal level. On subsidies, again, this is another major reform that the current regime undertook, which was to remove the broad-based subsidies like fuel subsidy, which tend to, benefit the higher income groups and distort the markets. In the report, we are recommending that the subsidies be more targeted to support like the vulnerable populations that are suffering, quite significantly from the impact of the removal of the macroeconomic reforms that have been undertaken, and also to support strategic sectors. So it's not remove subsidies. Subsidy is not all bad, but we have to employ it in such a way that it works. It's targeted to where it's really needed and it's impactful. So that is, what we're recommending in the report.
So on the back of what you've said, consistent reforms, which would help, of course, achieve the aim of macroeconomic stability. And you've known that this is a phase that we have to go through and there's need for targeted interventions. You also made emphasis on supporting small businesses. Anywhere in the world, small businesses drive the economy. You even highlighted agriculture and technology, which for me was quite interesting. But from that support, let me take it that those are part of the targeted sectors you're looking at. How can those incentivizing small businesses, encouraging them, further expand economic activities amidst this phase of reforms we're facing?
You're absolutely right that the SMEs are the backbone of any economy in terms of job creation, in terms of driving the economy. But they are also vulnerable to, some of the impacts of the macroeconomic volatility, like the rising cost of inputs, FX scarcity, inflation. They're very vulnerable. So in this environment, there's need to have a focused support for the SMEs in terms of ensuring that there's access to affordable credit, simplified tax regime, which we're seeing. In this regard, I want to commend the new tax bill that will impact them, positively. And then there's also the market access initiatives, to connect them to markets, and very importantly, capacity building, programs to help them scale and contribute meaningfully to the national output and employment. One creative approach that government can explore is blended finance, models that combine public funds with private capital to de-risk investments in small businesses. With the launch of the National Credit Guarantee Company, governments can, help to drive flexible credit schemes tied to digital credit scoring and transactional data to make access to capital and finance more, make it more available to the SMEs. Another effective strategy that we could also leverage is to leverage digital platforms to connect small businesses to the supply chains of large corporates and export markets as well. And again, government can also partner with the private sector. I'm sure you now know that Enterprise Nigeria is all about
private
collaboration,
sector collaboration
and
yes,
partnering.
yeah,
We believe that to drive economic development, public sector and private sector need to work together collaboratively. And so I'm saying that the report recommends that they work together to co-create these digital platforms that create market access, e-commerce infrastructure, etc., to again support the growth of small businesses.
Very, very, very incisive. I mean, co-create the platforms, enable the infrastructure, and of course, like you talked about Enterprise NGR, we have other catalyst of public-private partnerships.
Exactly.
So it's very important
we're always about collaboration, working together, harnessing all the resources to make it work.
Yeah, it's a journey, and I believe that a lot can be achieved through PPPs to scale small businesses. Well, for me, one subsector which you captured in this your report, which is dear to my heart, and I know that it has huge opportunity to unlock our economy, is insurance. And I must commend what you captured, because when I look at it, for the year 2024, contribution to GDP was 0.44%, which is totally very low. The penetration level is even low. And there are several things you highlighted. Problem of adoption, weakness in terms of enforcement, the challenges in the whole landscape. And we have the Nigeria Insurance Reform Bill 2024, which is on there. From what you've seen, what is critical for this industry to really reposition? We have the regulator on ICOM. We've seen some things they're trying to do, but what can we do this period to see insurance become that pivot like we see across the world? You know, Mr. Teslim always reminds me that all the biggest insurance companies in the world is actually owned by one of the richest men in the world, Berkshire Hathaway, doing well. So can't we have insurance companies thriving in that regard?
Why don't we have a Warren Buffett?
Even before you have a Warren Buffett, thank you very much for that question. And again, it goes to the heart of why we publish this report. The insurance industry in other jurisdictions is even bigger than the banking industry. So it's really very sad that our insurance industry is contributing a mere 0.44% to GDP. When you look at other insurance, other economies, the insurance industry is massive. It's massive, and there's a lot of opportunity, there, for us to grow, and that is why we're focusing on the insurance sector. Even now, we are working on another report that is laser focused on the insurance sector. And what we've done is to bring all the players in together. So we have the operators working in this coalition. We have the Nigeria Insurance Association. We have the Brokers Association. We have, members like Leadway and the leaders in the industry. And what we've thought is, because we see the problem with insurance is not something that one entity will solve. The idea we're bringing to the table is we need to form this group, have all the key stakeholders around the table, to not to write a very long report, because I think the issues are known, is to actually tackle the issues and come up with actionable recommendations that we can all go and advocate with the policymakers and every one of us singing from the same hymn book, such that we can start getting some traction for the insurance sector.
I also talked about something that was passionate to him. He was talking about insurance. I'll talk about something passionate to me, capital market. But before I go there, you've made I like what I'm listening to, the coordination and collaboration that is needed in the sector. But there was something someone once told me, and he said he sees the major problem being a trust deficit. Is there any way we can overcome the trust deficit? Claims being paid when they need to be paid. That has been critical to a lot of people, you know. And you talked about something that's also very important, mandatory. You use the word mandatory. Now, for vehicles, all of us, perhaps when we're renewing our, we all, because you know there's somebody on the road who's going to, but you don't have that for if you don't insure your house, for instance, or you have a mechanical equipment, for instance. Nobody's going to come and harass you that, why didn't you insure your equipment? There's a fire. And then there's the culture. In Proshare, we talked about anybody who wants to deal with us has to bring data, right? In God we trust, but every other person brings data, right? So in insurance, the issue is in God we trust. Insurance can go and sit down somewhere because they just feel that trust deficit is there. So if my yams are swept away by a flood, I'm not sure I'm going to get compensated. You know, and if other things happen, I'm not sure about claim payments. Is there a way we can overcome this? You know, through this coordination you're talking about, are there ways where we can ensure that yes, certain insurance must be mandatory, but then again, the claim payments should also be mandatory. So it's not just about me paying premiums, but it's about when the inevitable, not let me call it inevitable, but when the unexpected happens, I am sure that I'll be adequately compensated.
You raise a very good point. There is a strong trust deficit from the practice in the past. I would say in the past because it's improving. If you look at our report, claim settlement is improving. Even gross premium written in is increasing. We're not where we need to be, but the trend is in the right direction. I think that, first of all, there's a cultural aspect to this, because Jesus will take care of it and it will help me. And, people don't really understand and believe in insurance. So there's that, first of all, need for them to understand the product. And the industry has an obligation and a responsibility to simplify the product so that people can even understand it, and it's when insurance begins to impact your daily life that you see the need for it. Okay, so if abroad, if you have an accident or something, you exchange insurance and, insurance takes care of it. If I have that sort of response from my insurers, when they come next year for the premium, I will gladly pay it. But if I have to go through a long process, I'll bring this document, bring that document, bring that. So simplifying the claims process as well. So it's a whole lot of, so that is on the industry, and in terms of the mandatory policies from, governments to ensure, that one is enforcement, because if we have that and we connect it to benefits. So if I have that a third-party insurance, that's what third-party insurance is all about. If I have that third-party insurance and I hit someone and the claims process is efficient, I will pay it willingly the next time, but for us, it's not efficient. And you raise a very valid point there. It's still work in progress. It's something that we have to get really innovative about and, find the language that we need to speak to Nigerians in to get them to imbibe the concept of insurance. For instance, I know Leadway, I will just share a personal example, and it could be a bit morbid, but, a lot of us, funeral rights are very expensive, and I was very surprised when I came across a product from Leadway, I think it was, that helps you to insure against your funeral expenses, etc. It resonated with me and will resonate with any Nigerian, because our funerals are like carnivals, So bringing products like that people can relate to, and that when it happens, it affects them. Again, a friend of mine didn't have fire insurance and had a fire incident in her house. Now she's not only insured, but she's working to help the fire service, because, that sort of thing. So we have to bring it home.
Yeah,
to
bring it home. I mean, I really enjoyed this conversation. I wish we could go on, but of course we have to work around time. But the fintech industry remains part of that hope that we see. Things are working in Nigeria. I mean, 2024 accounted for over 29.6% of funding raised in Africa. That's quite remarkable. We have 4 unicorns from Nigeria. Remarkable things are happening. We're seeing prospects of moving beyond that payment to other sectors of the economy. But for you, what are those additional things beyond regulation that you highlighted? Interesting things that we can see allowed fintech scale and be sustainable, because this is one of our best stories in the country and it needs to be sustainable.
Absolutely. Fintech in Nigeria has been phenomenal. The main thing that I think the fintech requires is an environment that promotes innovation. We need to create an environment where they feel comfortable to innovate. And that is ensuring that we have sandbox infrastructure. And we are further recommending that we move away from the cohort based sandboxes to the open-ended ones, such that because that makes it faster. The cohort one means that you have to, once a cohort has been pulled together, you have to wait until the next cohort. And if you have a burning idea, it's just time consuming. But if you have an open-ended one, you can always quickly accelerate your idea. Of course, it's more burden on the regulators, but given that this sector is so key to Nigeria, and it's one of the sectors putting us on the global map, and it's one of the sectors that the Lagos International Financial Center is going to focus on, as a unique selling point, for us. It demands that we bring that sort of attention to it. The other aspect is, making it easier for them to access capital, both local and foreign. In fact, as a matter of fact, we don't want our fintechs to go and be registering abroad and looking for capital. We want to fund them here. We want to keep them here, because basically once they go abroad, before you know it, all those other jurisdictions are claiming them as their own companies. Meanwhile, they're Nigerian born and should be Nigerian and bred, Then as a government, we shouldn't forget that fintech business is driven by the level of connectivity that we have in the country, and also how strong our cybersecurity is, because as you're gaining on the one end, there are risks on the other end. So there should be focus on that because when people feel that the systems are secure, they're more likely to patronize those systems. But if the fraud level is going up and people, are looking for their money, etc., it becomes a problem. So these are some of the things that I think would help to drive the fintech industry.
I'm even happy that the Fintech Association of Nigeria is taking the issue of cybersecurity and risk management seriously. They're even working with regulators like NITA and even the central bank.
We don't have a choice.
Yes, because it's very important.
That has to be addressed.
Very addressed. Yeah. Even data protection.
Yeah.
Yes. You agree with him about the Delaware thing, because he has been always telling me that he doesn't like the idea of fintechs going to Delaware, all those parts registering. Yeah. So
yeah, absolutely. That's why we are doing everything we can to make sure that we bring them back here.
Just before I let you go, you sneaked in a concept, the Lagos International Financial Centers. As a Lagosian now, I feel very proud. I feel very proud to hear. I feel very proud to hear about this. But could you just give us some insight into what all this is about, the LIFC?
Gladly, because this is a project that we're very, very excited about, and we think will be just an absolute game changer, not just for Lagos, but for Nigeria as a whole. The Lagos International Financial Center is a groundbreaking collaboration between the Lagos state government and Enterprise NGR, representing Nigeria's financial and professional services sector, to position Lagos as a global financial hub. And basically, this project is strongly supported by the federal government, because it's a project that requires the collaboration of key stakeholders, being the private sector, the subnational, and the national. All three are required to bring this project to fruition. And the City UK is providing technical assistance. They're funded by the UK government, which is very much in support of the project. And it's a project that's moving very, very fast. And basically, what is the Lagos International Financial Center going to do? It is going to ensure that Nigeria, and Lagos in particular, creates an international standard investment-friendly environment in terms of regulation, in terms of legal frameworks, in terms of incentives, in terms of, that will attract international capital flows to Nigeria, and through Nigeria to the rest of Africa, because the LIFC will position Lagos as the gateway, for international capital flows to the rest of Africa. So if anybody is wanting to make any investment in Africa, they should be looking at LIFC, the way we're positioning LIFC. And the way we see it, Lagos has already quite a number of the attributes and characteristics to be an international financial center. We have a young population of tech-savvy young people. Lagos State is positioned on the Atlantic coast, so easy access for global businesses to connect with Africa. It already has, a bustling economy. It's one of the major economies on the continent, even Lagos itself, So, and Lagos has a huge plan that has been implementing consistently to improve infrastructure in Lagos. So this is something that is so key and ticks the boxes for even the macroeconomic reform agenda that the federal government has, because the signal and the message that it will send strongly to the international community is that Nigeria is serious about attracting international investment, and that we're really and truly open for business, because we would have put everything in place that will make them comfortable to come. And the truth of the matter is, it's a project that's begun. It's moving very fast, and we expect to have a launch within the next 12 to 18 months. So I'll leave it at that and ask you to stay tuned.
Stay tuned. Also, in just 1 minute, what should we expect from the 2026 State of Enterprise report?
2026 State of Enterprise report is going to again continue to spotlight the major contributions of the financial and professional services sector to economic transformation. We are going to work harder to have, more data available as we, work with MBS and other partners to overcome our data challenges. And of course, with the more data that we have, the deeper our analysis of these sectors. We always use our reports to highlight Nigeria in different ways. This year, we highlighted our cultural heritage. Next year, I will tell you. So when you download the report, you will see what we're planning for next year. But this report is something that we're very proud of, and we use it. We hope that at some point, well, it should be already a reference point for policymakers, students of FPS sector, etc. But 2026, another exciting year. And there's a lot happening in our industry, the bank capitalization, a lot of that, all of those developments will be captured next year. And every year we introduce something new in the report, to make it exciting for our readers.
Thank you for making this very exciting. This conversation, very, very interesting. Ms. Obi Ibekwe, CEO of Enterprise NGR. It was nice to look at the key takeaways from the State of Enterprise report for 2025, and so much to unpack from insurance to other critical subsectors. You captured 9 of them in this report. But it was a very interesting conversation, and thank you for giving us this time.
Thank you so much for having me. I've really enjoyed the opportunity to discuss all these sectors with you. And I would ask that those watching should try to download the report and read it for yourself. It's very, very informative.
Yes.
Thank you
and also,
very
it was
much.
nice doing this with you, Mr. Teslim Shitta-BEY, Director of Research, Proshare, always bringing in these very critical questions and conversations. Thank you once again for the time.
Thank you very much.
To our viewers, that was our Proshare Fireside conversation for today. I believe you learned a lot around the key takeaways from the State of Enterprise 2025 report. And you can log on to our website, follow our social media platforms to get further insights into this conversation. Thank you for being part of this. Till we come your way again, I'm Ottoabasi Abasiekong. Bye for now.